Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Monday, April 12th, 2021, and I'm pre recording this Trading Places Live for Tuesday, April 13th. Futures currently up a little bit. Got the Dow futures up 11, S&P 1, NASDAQ 12. So a little bit of rotation here in overnight action towards the NASDAQ. But not much really, just up a little bit. I think we have a big inflation report coming out Tuesday morning. I think that could have an impact on the market, especially if the media wants to run with it. I do think that the inflation number, the headline number, is probably going to be higher than expected, just simply based on the fact that we're replacing last March's decrease with this March's increase. It's the March CPI report coming out. And so I would expect that that headline number might startle a few folks. The Fed knows it's coming. Anybody following inflation knows it's coming. But still, maybe it'll rattle some folks, just the headline news. So maybe keep an eye out for that on Tuesday morning. But then after that, it's earnings season. Wednesday, we got earnings season kicking in, and it'll be a very interesting few weeks after that because I do believe we're going to see some very, very strong earnings. I have seen almost no warnings, and that tells me that Wall Street is likely to come through with some really good numbers. All right, we're going to get into the action today. First, let me walk you through today's agenda. We'll go into the daily market recap. Then, talking technically, industry strength. I want to go through, I don't know, maybe a handful, 6, 7, 8 industry groups that I think are worth taking a look at. Chart lists and earnings spotlight, and then we'll wrap up with 3 you must see, as we always do. But first, let me take you over to earningsbeats.com. If you are new to Earnings Beats, we have a free Earnings Beats Digest newsletter published 3 times a week, Mondays, Wednesdays, and Friday mornings. You've got all you have to do really just type in your email or your name, email address, hit the subscribe button, and we'll get you set up. It's really designed to help you look at the market the way we do at Earnings Beats. We take a pretty good focus on earnings, relative strength, those types of things. And I think it'll really help in your trading and or investing. So if you'd like to try it out, it is free. You can unsubscribe at any time, no credit card required. Simply put in your name, email address, hit that subscribe button, and get things started. On Monday, the Dow Jones Industrial Average finished down 55 points. S&P down fractionally, down less than 1 point. And then the NASDAQ was down about 50 points. So on a relative basis, we had the NASDAQ lagging a little bit. But you can see here, NASDAQ's been performing really well, trying to get back up to that 14,000 level and then eventually take out that February high. We've already seen the Dow and the S&P break out to all-time highs. So this is really good action in the market. Mid caps, small caps, they have not broken out yet, but both did actually finish higher on Monday. And if you look at all 5 of these charts down at the bottom, the accumulation distribution lines, all going higher. I think that's really bullish, and I think it suggests that any pullbacks are being accumulated by institutions. As far as sectors go on Monday, discretionary stocks led, up almost 2/3 of 1%. Real estate up nearly 6/10 of 1%. Staples up a little more than half of 1%. And then on the flip side, we had energy lagging. Again, energy, you can see since about I don't know, maybe the start of the second week or maybe into the second week of March. Since that time, we've moved down about 10% on the XLE. So definitely a pullback in energy. So we continue to show weakness there. Technology, after a very, very strong run the last 2 weeks or so, did see a little bit of profit taking on Monday, but not bad, down about 0.5%. 10-year Treasury yield. Now, I did mention the inflation numbers coming out tomorrow. So we do have the March CPI and core CPI. So this is inflation at the consumer level. The expectation is for March CPI to rise 0.6 of 1%. Now, that's going to be replacing a drop last year in March of 2020 as a result of the pandemic. So the headline number, I think, is going to be maybe a little shocking to some, and it'll be very interesting to see how the market reacts to it. March core CPI expected to rise 0.3 of 1%, so half of the headline number. But still, both those numbers are ahead of what the Fed wants on an annualized basis. So we'll see how the market reacts. The Fed has already talked about it. The Fed says they are expecting inflation to jump temporarily. They're expecting it to be transitory, meaning very short term in nature. I think it'll be the next 3 months, March, April, and May. Last year in 2020, as a result of the pandemic, the CPI went down all 3 months. Going back since the beginning of this century, I believe that's the only time we've seen that happen. So those 3 months, March, April, and May of 2020, are going to be replaced by more normal numbers. With March CPI, as I said, expected to be perhaps as high as 0.6%. So that year-over-year number, especially as we get into April and May, it's going to start looking, little little scary for some. But I do believe, like the Fed said, I expect it to be transitory. I don't think they're going to raise rates as a result. They've said that it's very, very unlikely that there will be any rate hikes in 2021. And they're on the record saying that there's likely not to be any rate hikes until 2023. So I guess you got to do with that what you will. All right, looking at the 10-year Treasury yield, though, we've been rising. Normally, inflation fears will send folks out of bonds because those yields just aren't worth much in an inflationary environment. You really start losing money. So anyway, a lot of folks will bail on the bonds. So it'll be interesting to see if we get another spike in Treasury yields, because that's what, part of what caused the selling back in February and into March was the inflation fears and interest rates moving up. Were they moving up because of stronger economy, or were they moving up because of inflation? That's a big differentiator. If interest rates are going up to fight inflation, that is not good. If interest rates are going up because of a stronger economy, that's fine, because interest rates are at historic low levels. So rising interest rates are not going to be a problem if we have the strength in the economy. But if it's because of inflationary concerns, then we've got some issues. But I don't believe it is. I don't think we're going to have any issues with that. But in the short term, again, maybe the market's fearful as a result. We need to kind of keep an eye on what happens tomorrow morning. All right, let's keep moving on. I want to get into talking technically. So in talking technically, I just want to go through some of the aggressive sectors to show you what the charts look like. So technology, which had topped in middle February, we pulled back, went through an inverse head and shoulder pattern. This is a bullish continuation pattern. Here was your high, left shoulder, back to the neckline, a lower low puts in the head, back to that neckline. Then we come back down, basically almost perfectly symmetrical with the left shoulder, and then a breakout above the neckline. This is a very bullish pattern. So I think it's great that technology has joined the party, broken to an all-time high, and broken out of this bullish continuation pattern. Then we've got consumer discretionary. Consumer discretionary also sideways consolidated, although I don't really see any kind of a pattern here. But nonetheless, we broke out again. We took out that February high, making new highs in consumer discretionary. I think this is bullish as well. XLC, communication services, also making a breakout. Now here, what I saw was higher prices, February, March highs. You can see them clearly going up. And look at the PPO coming down. So we had a negative divergence. What happened? We went back down to the 50-day, got very close to the center line, and now we're moving back up, breaking out again. So some might look at this and say, oh, higher highs and we still have lower PPOs, negative divergence. I don't believe that. That's not the way I look at these negative divergences. I think that they reset. I think when you get a 50-day test and you move back down to the center line or close to the center line, I think we reset, and then we're free to go higher again. And I think what's happening right now is momentum is accelerating. Negative divergence tells you momentum is waning. I think that's the opposite of what's happening here. And if you look back to what happened here in December, see how we kept trying to move higher? See the PPO coming down? What do we do? 50-day test, center line test, and then we move up. Now, when we moved up, you might say, oh, there was a negative divergence. But we kept going higher. We printed new highs. So I don't believe that. I think that these negative divergences can mark long-term tops, but in a secular bull market, generally, they're just going to create a little bit more longer period of consolidation. And I think that's what we're getting with communication service, or what we got with communication services, and they've broken out again. XLI, industrials, just continuing to ride up above that rising 20-day moving average, which is well above the 50. I think industrials continue to look very strong here. And then finally, financials is the last of the 5 aggressive sectors breaking out, but this one is breaking out and they do have a negative divergence. So I'm a little more concerned about financials. We're going to get some big financial reports, earnings reports. And if we struggle to go higher after these earnings reports come out, I would expect to see financials maybe pull back, possibly the XLF back to 33. Test the recent lows, maybe get that 50-day test, reset the PPO at the center line. That's one thing that I'd be looking for. Very similar to what happened in January. This is when earnings came out in January, by the way. Broke out to new highs, lower PPO, higher price, and there we worked our way back down to the 50-day center line test, and then we went higher. I wouldn't be surprised to see a similar type of move here as we work our way through April. All right, let's move on to industry strength. So next up, I want to just pull up some industry groups that I think are worth noting, breaking out, pulling back, whatever. But here's the internet group. Big breakout above the February high. I think internets continue to be very strong. Go into media agencies. Media agencies just broke out again, just barely clearing this triple top back in February. We've seen a little bit of pullback, but I think maybe the 20-day moving average, if we did pull back, we'd probably hit that and bounce. But I see this group going higher. Clothing and accessories, one of my favorite groups right now, finally broke out after all of this sideways consolidation right here. Broke out on Friday, and then on Monday, we added to it, tacked on. I like to see that. Now, we may pull back at some point, but I would absolutely expect that rising 20-day moving average to provide great support. The broadline retail group hasn't broken out yet, but I wanted to point it out because Amazon's been strengthening, and I'll talk about Amazon in just a little bit. But when you look at some of the strong seasonal stocks, Amazon is among those, and Amazon's really starting to take off here in April, and that's leading broadline retail to the upside. The home improvements group, not many groups any hotter than this. Since early March, it has been straight up with hardly any pause whatsoever. So I think home improvement stocks look pretty good here. Then we go into the business training and employment agencies group. Look at the tops coming across here, 185, bottoms 170. So we had this nice little sideways consolidation, just broke out. Last Friday, we made the breakout. We continued it today. So this is a group that I think looks poised to move up to around the 200 level. The apparel retail group continuing to push higher. Got that beautiful bullish engulfing candle right at the 50-day moving average about 2-3 weeks ago. And since then, we have been moving up, breaking out. Another good looking group. And the last one I'll bring up is the specialty retail group. Looking at this sideways consolidation, broke out at the beginning of the month, and it has been going up just about every day since. So a lot of sideways consolidation. Really hadn't gone too far in this group since September. So this could be a group poised to make a run here. So keep an eye on the specialty retail group. All right, chart lists. What I wanted to do here, we do a lot of chart lists for our members, a lot of research. I look at our services at Earnings Beats as a research and education platform. That's really what we offer to our members. And one of the chart lists that we put together after reviewing literally thousands of earnings reports is our strong earnings chart list. So these next few companies that I point out are all coming off of the strong earnings chart list. And just from a technical perspective, I think they look kind of interesting. So the first one here is CareDx. CareDx, you can see off of the bottom here on the first push up, volume was pretty nice. Came back down, put in a double bottom, and then came up and testing 75. If we can get through 75, that'd be really bullish. But moving back above the 20-day and then so far holding it is good, but we want to get that breakout through 75. So watch CDNA. HCAT, this is Health Catalyst, broke back up above the 50-day moving average. You can see this one had been trending below the 20, got through the 20 and was holding it on these pullbacks and now breaking out. This was the highest close that we've seen on this stock since all the way back in the middle of February. So almost 2-month closing high on HCAT. Check out the volume coming in on Monday. So I think that this action very bullish. Next up, Plug Power. Plug Power, not been a very good stock for a while. Renewable energy has been just horrible. Renewable energy has been the worst group over the last week, last month, last 3 months, year to date. It's just not been good. It's been a very, very weak group. Now, it comes on the heels of an unbelievably strong move in 2020. So we are seeing some profit taking and pulling back to test some key areas of support. Now, one area that I'm looking at on Plug Power, and I'll annotate this for you. We had broken out on Plug Power. See the high back here in December? That was 2880. We broke out above that, and we never came back down to 2880 until Monday. We hit 2877 and then reversed about $1 off of it to close at 2968. Also, not showing on this chart, but the PPO is higher even though prices have moved lower. So let me get rid of the AD line and we'll put that PPO in up there. So you can check this out. So here you can see the PPO starting to turn back up even though prices made a new low. So we're getting a positive divergence as we hit this price support, and there are a ton of in-the-money puts on Plug, and options expire this Friday. So a lot of in-the-money put premium, and that could mean a short-term pop in price to eliminate some of that put premium. I'm not saying it's a guarantee, but we've gone through this plenty of times before in the past. I always say you've got to be really careful as a trader as you get close to options expiration. Stocks that have been downtrending for a while, many times will get this unexplained move to the upside temporarily, and then they'll continue their downtrend. And stocks that have been rising and looking really good and strong and breaking out, you got to be careful of those for a short-term pullback, especially if they're heavily traded in options. You can go to cboe.com and check out the in-the-money call and put interest that's out there. But you want to be careful as a short-term trader this time of the month, heading into that third Friday of the month. If you're unfamiliar with options and max pain, which is what I refer to it, we do have an event coming up Tuesday. We always have one Tuesday before options expire for our paid members at Earnings Beats. So if you go back over to earningsbeats.com, hit this join today button. It's a $7 charge for a 30-day trial, but we'll refund you the $7. So literally it's a no-cost trial for 30 days. I think you'll be fascinated by the Max Pain webinar if you haven't been a member before and you haven't seen that. But I'll give you some potential trading candidates going into options expiration where I am looking for reversals in certain stocks. And I think Plug Power is going to be one of these. Now, trying to figure out exactly what day it reverses. Could it go back down for another couple of days and then reverse later in the week? Absolutely. But I do think we're going to get a push back to the upside. And sometimes that reversal occurs at the beginning of the following week because if market makers, anybody buying puts, if market makers are selling puts, at the time these options expire, those puts that they sold, that market makers sold, become shares that are shorted. Market makers sell those shares short for anybody that wants to exercise their options. So got to be a little careful on stocks as they go into option expiration. So it would be in the interest of market makers for a stock like Plug to move higher later this week and potentially into the early part of next week. All right, another stock. How about Sale? This is Sale Point Technologies. It's got this double bottom here. You can see that's about where we broke out of this top, about $48, something like that, when we made the move in December. And now here we are back at 48 and change. So this is just a level where we could see a reversal. Moving on, I want to move on to the short squeeze chart list. Here, we put together a list of stocks that are heavily shorted for our members. So any stock that has short interest or a short percentage of float that is greater than 20% is added to a chart list. And right now, I think there are probably 50 stocks or so on this list. And if we get breakouts, I wouldn't be going long any of these stocks unless they're breaking out, or unless if you wanted to try buying them at a support level, that's fine. But the whole idea behind a short squeeze chart list is you're wanting to see a short squeeze, and the way you get a short squeeze is to see breakouts, and then those that are holding shorts are almost forced to buy because the pain starts to grow as the price moves higher and higher and higher. When you're buying a stock on the short squeeze chart list on a pullback, there's no incentive for shorts to be covering and to be buying. So I don't think that's a great strategy to buy those on a pullback. I would prefer to buy them on strength and when we're breaking out, because that's when it's more likely to trigger a short squeeze. So you look at a stock like ASO. This is Academy Sports and Outdoors. Here's your breakout. Look at the volume picking up. I have a feeling you're seeing some shorts having to cover this stock, and it pulls back, but it's still in this nice uptrend. And the last couple of days, we've seen it rising again to the upside. So this is one that I would be interested in on the long side. That's a short squeeze candidate. Another would be Dick's Sporting Goods, and I've mentioned this one recently. But when you're breaking out and you're putting in new highs, anybody that's shorting the stock is losing money. And the thing about shorting is you have unlimited risk to the upside. You can lose a lot more money. When you go long a stock, you can only lose the amount you invest. But if you're shorting a stock, you could short it and your proceeds could be 10,000, but if that stock goes up 10 times, you now owe 100,000. So if it goes up 20 times, you owe 200,000. Your risk is unlimited as prices keep going up. And so that's what a short squeeze entails, is it really is trying to take advantage of a short-term market inefficiency. Just think back to a stock like GameStop. Now that had a tremendous amount of short interest, and it was, really crazy with what was taking place. That's not your normal everyday short squeeze, but the concept is roughly the same. All right, maybe one other that I would keep an eye on this short squeeze chart list is Bed Bath and Beyond. It made a huge short squeeze run back in January, pulled back, and you can see it's been trying to trend higher. I think if it broke above about 33, it would start to get my attention. So we still got some work to do, maybe another 10% or so to the upside. But if it were to get back up above 33 and you see the volume start to pick up, that's when I'd be more interested in something like this. All right, seasonality chart list. We do this every month for our members. So we'll give everyone, for instance, 20 stocks at the beginning of the month. And those 20 stocks tend to have very, very strong seasonal patterns for that month. So let me show you, for instance. So if you go in and you pull up seasonality in this drop-down menu, put in Amazon. So if you look at Amazon and you go back, well, you can see over the last 5 years, April, it's gone up every year. Last 6 years, every year higher. 7 years, every year it's higher. And then finally, it's been 7 years, so you have to go back 8 years to find a year when Amazon didn't go up in April. And if you drag this all the way across for 20 years, you can see it goes up 80% of the time in April, with an average gain in April of 9%. So then you go in, you look at the chart, and of course we sent this out right at the beginning of April, but look at what Amazon's doing. This is what Amazon does in April. So you got to be aware of some of these seasonal patterns. So a couple of others that we had sent off to our members at the beginning of the month. Lululemon. I also wrote about this one in Chart Watchers over the weekend, so you can go back and look at that article. But I love what's taking place on this stock. I love the AD line. Look at the AD line, these lows holding. Actually, the lows are rising while price action's been coming down. I think institutions are accumulating Lululemon. And now we just got today the breakout above the 50-day moving average for the first time since back in the early part of 2021. So almost 3 months since we've been above the 50-day. Look at that PPO getting ready to go positive. I see some really good stuff taking place. And we just moved up to about a 6-7 week high on Lululemon as well. And it's a really good seasonal stock. Align Technologies, strong April stock. Look what's going on as we start April, starting to rally. Etsy, look, Etsy up in April. I want to show you this seasonality chart, and then we'll move on to the next segment. But if we pull up Etsy and drag this back, now Etsy doesn't have a long history. 7 years though. Look at that 1 month where that's gone up every month. Which month is it? April. And at this point now, including what it's earned this month, it's got an average April gain of 18% over the last 7 years. Pretty strong. So you got to be aware of what's taking place on a seasonal basis. All right, let's move on. I'm going to go into earnings. And for earnings, there was just one company that reported after the bell on Monday, and that was Simulation Plus, SLP. Simulations Plus. Been downtrending. They actually beat 15 cents versus 14 cents. We'll see how the stock does tomorrow. If it did go back down to the low, I think what we're going to see is a positive divergence form. So if we actually open, say, above 59 and go below 58 or 57 intraday, look for a reversal. If we come back up, have a reversal, we may be putting in a bottom in SLP. If you look at the pattern, higher high, higher low, higher high, so far higher low, I think that's the low we want to really focus on. We want to make sure we don't lose $53 support. FAST will be reporting, Fastenal, F-A-S-T, will be reporting Tuesday morning. The expectation there is for 37 cents a share. Price action started to do really well. I like it when you move above the 20 and you hold the 20 on pullbacks. Then you rise to a new high, pull back, hold the 20 again, bounce. This is starting to show the signs of a stock that is in a really nice trending pattern. And if we pull up the relative strength off of the early March low, you can see we're starting to show some strength. With earnings coming out, I'd like to see another breakout here to the upside on a relative strength basis. So let's see if we can get that breakout. A move through $52 would be bullish on Fastenal. All right, to wrap up the show for the three you must see, earnings season is kicking off on Wednesday morning as far as I'm concerned. That's when really we start to get the bigger companies coming through. There are going to be a number of financials that will report early in the earnings season. And so let's start off with three of them to just look at the chart for the three you must see. JP Morgan will report on Wednesday morning. And looking at the chart, I mean, we've had a huge run up. When you look on a relative basis, JP Morgan just moved down to about a 8-month relative low versus banks. That's kind of bothersome to me. And this has taken place here over the past, really the last 2.5 months. Now, I think they're going to come out with a good report. I think all banks' financials are going to do well this season in terms of earnings. But is it already built in? And I think that's what we're going to find out. So let's see how JP Morgan reports on Wednesday. I think they're going to beat estimates, but let's see how they react. We might get a 50-day test coming up on these. WFC, Wells Fargo. I have not been a fan of Wells Fargo for a long time, but they're actually starting to look better. Look at the AD line moving to about a 6-7 month high. On a relative basis, we're near about a 9-month relative high on Wells Fargo. So this one actually has begun to show some strength. And then we're going to wrap up with Goldman Sachs. Goldman Sachs also reporting on Wednesday. And just recently, Goldman Sachs was at a 52-week high relative to its investment services peers. And that's when it topped. So I think it's just going through a consolidation, probably a cup. I think we're going to get a good report. And I think you're going to see the stock trading back up around 350. All right, that's it for me. Listen, everybody have a great Tuesday. And if you get the chance, come on over to Earnings Beats. Check out our Max Payne webinar. It'll be at 4:30 on Tuesday, and you can sign up for a no-cost 30-day trial. $7 up front, then we refund it to you. Anyhow, everybody have a great day. Be back on Wednesday at earningsbeats.com for your next session of Trading Places Live. Take care, everybody. Happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.